In the beginning, there was no money. People relied on a simple system of trade known as barter. If a farmer needed tools, they would trade their surplus grain with a blacksmith. This system worked well for small communities, but as societies grew more complex, barter became inefficient. Imagine trying to trade a cow for a loaf of bread. The logistics were challenging, to say the least. Gradually, certain goods emerged as more desirable or durable, becoming early forms of money. In ancient Mesopotamia, barley was a common form of payment, while societies in China and Africa used cowrie shells. These early currencies paved the way for more sophisticated financial systems. As trade routes expanded and civilizations interacted, the need for a more universal form of exchange became apparent. The invention of coinage marked a turning point in financial history. Around the 7th century BC, the Lydians minted the first standardized coins. These small, portable discs of precious metal revolutionized trade, making transactions faster and more efficient. With the rise of coinage, dedicated institutions began to emerge to handle these new financial instruments. Temples, with their perceived safety and stability, often housed early banks. These institutions acted as custodians of valuables, provided loans, and facilitated trade. In ancient Babylon, for example, temple priests managed vast financial operations, lending money at interest and financing long-distance trade expeditions. This marked the birth of formal banking as we know it. The Italian Renaissance witnessed a flourishing of trade and commerce, leading to a resurgence in banking innovation. Powerful merchant families like the Medicis in Florence established banks that financed large-scale ventures, including voyages of exploration and artistic patronage. These banks developed sophisticated financial instruments like bills of exchange, which allowed merchants to transfer funds securely across long distances. The Medici Bank in particular grew into a financial powerhouse, financing everything from the papacy to the English wool trade. Their success fueled a wave of bank openings across Europe. These banks played a crucial role in driving economic growth, facilitating trade, and funding the arts and sciences. The Renaissance marked a golden age for banking, laying the groundwork for the modern financial systems we rely on today. The Industrial Revolution brought about unprecedented economic and technological changes, transforming the banking landscape forever. The rise of factories, mass production, and global trade created a massive demand for capital investment. Banks evolved to meet these needs, financing large-scale infrastructure projects like railways and canals. The invention of the telegraph and the telephone revolutionized communication, allowing for faster and more efficient financial transactions. Banks began to establish branch networks, extending their reach to wider populations. The 20th century saw the rise of central banks, like the Bank of England and the Federal Reserve, tasked with regulating monetary policy and maintaining financial stability. Today, banks play an even more central role in our lives, providing a wide range of financial services from everyday transactions to complex investment products.